What's up, y'all? I'm Mike, the Money Motivator. Today, I want to talk about personal finance. In this video, I want to give you all of the information that you need to know in personal finance. They don't teach you this in school, and most of us are failing on this topic. Don't worry, I got you. So with personal finance starts with your income. If you're not making enough money to save for a rainy day fund or invest, you need to find another job, get a different career, or also pick up some side hustles. Saving and investing is all a part of finance, and it's something that you have to do even at 18 years old. Most important part about investing is time. You don't have to put a lot of money in. You could put $1 a week in the S&P 500. The good thing about investing in retirement in the S&P 500 is not about how much you're putting in, but how soon that you start putting in. So the sooner that you start is the less that you have to put in. I'm gonna give you a $10 example on how you should split up $10 for your rainy day fund and your retirement. I wanted to split up $10 for you to put it in the S&P 500 and a compounding interest savings account for a rainy day fund. You only want to put about $1 in the S&P 500 and $9 in your rainy day fund. The S&P 500 is going to give you a return of 10 to 12%, and you're not going to need that money until you retire. So you need to be putting less into that and more into your rainy day fund, because your rainy day fund is going to happen sooner, and the interest on the savings account is less than you'll get on the stock market. Investing for retirement is a must. You have to do it. The sooner you start, the less you have to put into it. But you do have to continuously put into it to build it over time. It's going to grow on its own, but you have to continuously add to it. So the first part of personal finance is your income. My personal goal is always to make more money than I did the year before. That you're improving your career or switching to another career. But you need to make sure that you're making enough money to live. And if you're not, you need to look in other areas to make money. Even if you're making enough money to live, I think everyone should have a side hustle. Find something that interests you. I have a video with 25 side hustles. At least one of them is one you've never heard before. So check out one of my previous videos for the 25 side hustles. You want to make sure that you're having multiple income streams. Get a side hustle or pick up extra hours at work. That's going to help you get out of a paycheck to paycheck life by putting in extra effort to get a side hustle to open your own business while you're still working your job. You want to make sure your income is good, but you also want to make sure that you're spending less. Do not open another credit card. Don't keep spending on credit cards. If you're strict enough to make sure that you're paying your bills off and you're using the credit card for stuff that you normally have to buy, like gas, groceries, those are the only times that you should be using your credit cards and paying the balance off completely. You want to keep debts clear. Of course, you want to start to build your credit, so you want to get a credit card or two, maybe three. Use them on a regular basis, but pay it off. Make sure you're always paying all of your bills on time, because your credit is a very valuable part of your personal finance. So you want to make sure you're making enough money. You want to make sure your credit is good. You also want to make sure you're not spending all of your income. Now, when I say spending all of your income, I personally spend all of my money by the time my next check comes in, but I have something to show for it when it's all said and done. I put money into my savings account. I put money into my retirement account. I put money in my vacation account. Even if I spend everything when my paycheck is done, I made the initial right move. The best way to do that is automatically set up a deduction from your paycheck into the S&P 500, automatically setting up the deduction for your rainy day fund from your check the day you get paid, automatically setting up a deduction for your vacation fund as soon as you get paid. Now, if you don't have enough in your vacation fund and you're ready to take a vacation, at least you got a head start. When you want to start working extra and saving up more money because it's getting closer to the time and you got a plan in mind, then you at least got a head start in that vacation fund. You're never starting from zero, because it's a part of your every time you get paid finances. So vacation, retirement, and rainy day should always be a monthly bill, but you don't want to have unnecessary bills. You want to check your bank statements and check your habits. If you stop at Starbucks every morning before you go to work, or you stop at a fast food restaurant on your way home, but monitoring at least 3 to 6 months of your previous bank statements will actually teach you how bad you have been doing with your finances. It will also show you where you can make room in your finances. So check your bank statements, stop spending money in certain areas, and make sure that you have your retirement account and your rainy day fund or in your vacation fund. But they all have to be a part of every time you get paid. I don't care if it's $5 split amongst the three, but you need to start. Compounding interest will help you grow that money. It's not money that you're saving up on your own. So you want to spend more towards your rainy day fund and less towards retirement and vacation. But you do want to make sure that you are putting money in those areas. There's a lot of different tricks to minimize bills. Another way to minimize bills is to check your car insurance quote every 6 months. Car insurance quotes change all the time. If you have an app like Jerry, you log your information in Jerry. Jerry will pull up quotes from all companies. You could choose from there, but every 6 months you should be checking new car insurance quotes. That'll save you money every time. Every time that you switch the policy, you should find something cheaper. Also, if you're keeping your driver record clean and you're improving your credit and clean driving record are two important things for your car insurance. So don't get in too many tickets or accidents, but you also want to improve your credit to decrease your car insurance. So as you can see, credit is a big factor of finance. Credit can destroy and eat your finances, interest that you're paying on those payments, but also your credit score is important because your score improves all areas of your finance. It'll give you a less car payment, a less mortgage rate because of interest. Credit is very important. You want to make sure that you have a good credit score and you don't have a lot of balances on your credit cards. You want to have less payments as possible. So you don't want credit card payments to be a bigger part of your finance. That's just unnecessary money that you're paying to the credit card company. When the bill is $25 and only $10 is going towards principal, you'll never pay it off. Last advice I want to give you all with personal finance is to crawl before you walk. If you got a Bentley, age 20, age 30, even age 40, if you got a Bentley any less than 50 years old, you're making a purchase too soon. You haven't built enough wealth to manage that type of payment. So crawl before you walk. If you reduce the amount of vacations or the amount of spending that you're doing in your 20s, by the time you're in your mid-30s, you'll be able to do it at will without risking a retirement, without touching your emergency day fund. So finances is a crawl before you walk process. The older you get, the more financially stable you should become, but there is a process. Make sure you're not overspending, save and invest. It's all a part of personal finance. Buy used cars and review your bank statements. Keep your emotions intact. A lot of time we see products and we got the iPhone 14, but the 15 just came out. Keep your emotions in check. If you have the 14, you don't need another iPhone till the 20. But that's it, y'all. I'm Mike the Money Motivator. Today, I hope that you do more than watch this video, but you start to guide your finances in the direction for your success. Make sure you like and subscribe. I'll be back next week with another video.